But what's the Chartbuster idea that Kunal is spotting for us? Kunal, tell us more.
So Anisha, it's a very interesting comparison between the latest trends of what's happening across the emerging market indices as compared to what's happening to the Nifty 50. So what I've scanned through is the set of emerging market indices over here, right from the likes of Taiwan towards Korea, Kospi, Hang Seng, and Shanghai, etc. Most of these markets in the last 5 to 7 days approximately have gone into a bit of a corrective phase. So for example, as you can see, the Taiwanese market has gone to a correction, Shanghai market has went into a correction from the 3,400 odd levels for the Shanghai index to almost 3,200 approximately. Same is the case with Hang Seng, etc. Now, most of these emerging markets have actually gone to a phase of correction. But when we look at our markets in the Nifty 50, we've actually went to a very mild correction, but we've bounced back quite strongly. So in this kind of a scenario, it always makes sense to go with levels on the index. So in case if we manage to break out on the upside, say at 17,850 mark, we can expect that this uptrend could continue, and the divergence which we are seeing right now of Indian markets outperforming the emerging markets, that could continue for some more time on the upside. On the other hand, if we break below that 17,550 mark, that's where we would believe that there could be a sharp adjustment from our markets as compared to what's happening across the emerging markets. So one has to play with levels over here quite importantly. 17,550, which was the previous swing low which we tested twice in the last 1 week, that remains to be a key support. And on the upside, 17,850 as a major resistance for the index.
Okay, moving right on then, Nooresh, let's get in your Chartbuster call as well and understand the stock that you're tracking. Triveni Engineering, why does that one feature on your radar? Nooresh, you're on mute.
Looking at a lot of stocks in the sugar segment, we are seeing this classical formation of consolidation after the last fall. Triveni Engineering is a mix of sugar as well as engineering. Now, the stock has gone through a sideways phase for the last 6 to 10 months roughly. 250 has been the base, 295 to 300 is a resistance. Setting up for a breakout above this. Once this breaks out, we could actually be looking at a new 52-week high out here. Looking at a target price of 350 in the short to medium term, stop loss at 270. And overall, if we look at the sugar spot prices, they are also continuing in a strong trend that augurs well sentimentally for this sector. So watching out for Triveni Engineering, even Balrampur. So the whole sugar segment could be interesting, but Triveni could be the one which could also give a breakout in the near term.
Okay, so those were the Chartbuster ideas, but what are the mid-cap bets that our chartists have for us and the cracker ideas, Kunal?
So the first one which I'm suggesting is a buy in Titan. Again, a very resilient stock so far, at least at the start of the day today. Would suggest a buy with 27.50 as a target and stop loss at 25.60. DLF is the other name which I'm extremely bullish on from a near term as well as from a medium term play. The stock has made a comeback after a minor blip or a correction. So would suggest a buy. 440 remains to be a near term target. Stop loss could be kept at 395.
All right, Nooresh, let's get in your top recommendations going.
This is a buy on L&T. The stock continues to show strength. Stop loss at 2,200 and a target price of 2,500. Second is a buy on Apollo Hospitals, which is setting up for a breakout move of 44.50, 44.80 levels. A risk reward trade here. A lot of other hospital names have already done well. Could see some catch up here. Stop loss at 43.50 and a target price of 4,800.
Okay, so those are the top recommendations.